Good morning and welcome to Charting the Markets on Thursday, the 7th of December 2023. Excuse me, I just got feedback in my earpiece there. Basically, let's discuss the financial markets. Asian indices took their cue from a poor finish on Wall Street, where bullish momentum faded thanks to declining energy stocks. And overnight, poor Chinese trade data hit sentiment in the Asia-Pacific region, as weakness in imports flagged fresh concerns about the Chinese economy. And lower oil and commodity prices also hit markets, in parts due to a revival of the US dollar, which has been rising for most of this week and regaining some of its recent losses. And overnight, we saw the yen seeing fresh inflows, as Bank of Japan Governor Kazuo Ueda said the central bank had several options on which interest rate to target once it ends its negative interest rate policy. And this comes as Japan's inflation has exceeded the BOJ's 2% target for over a year now, prompting speculation that the central bank could phase out its massive stimulus next year. But Ueda also clarified that Japan has yet to show a sustainable rise in inflation driven by wage growth. On the data front, we have only the weekly unemployment claims out of the US later on today. And that's really the main event ahead of tomorrow's much more important non-farm payrolls. So let's begin by having a look on the FTSE 100. And as you can see here on the daily financial bet, we've got a sideways trading range in place. We did rally to a Friday's high at 7,543. And since then have tried to retest that level but failed so far in overtaking it and heading up to the red line here, the 200-day simply moving average at 7,569, and instead traded water around the 55-day simply moving average here in orange at 7,482. So range trading going on, but since the previous trend is still showing higher highs and higher lows, the FTSE could continue to grind higher into year end and perhaps even manage to close on a positive note for the end of the year, because at the moment it's still trading by about a percentage point lower than break even, zero basically. So it's still a negative territory at the moment, whereas other equity markets such as the French CAC 40 have continued to advance, and actually yesterday rose to levels last traded in August of this year. As you can see here, Yes, we are perhaps seeing smaller candles, but we are still heading higher. The upside momentum, this risk-on sentiment on monetary policy globally being pushed towards no longer rate hikes being seen, but also now with expectations of rate cuts starting to be seen perhaps at the end of the first quarter of next year or the beginning of the second quarter, we have equity markets rallying basically. And you can see here that CAC 40 is heading back up towards its late July high at 7,526, which represents the next upside target once we see a rise above yesterday's high on this daily financial bed at 7,455. Now, this technical upward momentum will very much stay in place as long as we stay above the October to December uptrend line. As you can see here, this currently can be seen around 7,352. And more importantly, from a medium-term perspective, as long as we stay above this breached July to December downtrend line, the red line here, the 200-day simple moving average, and also the last reaction low at the end of November, which came in at 7,214. So basically, as long as we stay above there, further upside is most likely to be seen into year end. And the story is quite similar with regards to US markets. Here you've got the Dow Jones Industrial Average, which had risen all the way to levels last traded in January of 2022, as you can see here, up to 36,299 on this daily financial bed. But we are short-term consolidating now and trading sideways. So ignore this trend line break because it's normal for trend lines to flatten out. What I wouldn't be surprised to see is perhaps even a reversal to the downside short term if the unemployment data were to disappoint. But even then, we have some really good support now coming in at the July highs, 35,690. And basically around there, we would then probably hold again and then just continue this uptrend. So above 36,299, the current high seen in December. If I zoom out onto weekly chart, you can see here that we had 5 consecutive weeks of gains. And this week may be the first week where we see a small consolidation, but this trend is very much quite strong. And I wouldn't be surprised if it were to continue to the upside as it did basically back in October of 2022. You can see here we also had 4 consecutive weeks of gains, consolidation, and then further upside for the next 4 weeks. So next year's target really for me is the January 2022 high, 36,954, the all-time high in the Dow Jones Industrial Average, I believe. So we're very much on track to hit that, and we'll probably do so in the first quarter of next year. But short term, we could see some profit taking just into the end of this week. And the same is happening really with regards to the Nasdaq. You can see here the Nasdaq is also consolidating below its recent highs. Actually, this one I should rewrite. This is 16,167 now. And since then, we've just traded sideways, trading some water. But again, the high seen back in September at 15,628 is likely to offer support going forward. So just a short-term consolidation. After all, the Nasdaq has risen by about 46% year to date. So it's normal for some people to take some money off that table, basically as we head into the quieter period of the year around the festive season. The US dollar has managed to regain some of its lost ground over the last week. And you can see that on the Australian dollar here, where we had earlier in the week the Reserve Bank of Australia keeping its rates steady as was expected, and basically taking a dovish stance. And that has led to us coming off this 3.5-month high at 66.88 and fall through not just the November to December tentative uptrend line, but also the red line here, the 200-day simple moving average at 65.77, which today may act as resistance going forward. So here we formed a minor top, and we may actually retest the early November low as we did earlier this morning in the course of next week. So probably we'll see some sideways trading around the 200-day simple moving average here. And as long as we stay below 66.88, the US dollar basically could strengthen further and basically take Aussie dollar further down, perhaps towards the mid-September high at 65.11 and the orange line here, the 55-day simply moving average at 64.39. There is another currency pair which is kind of interesting at the moment, and that's the British pound against the US dollar, in that it has also topped out, as you can see, at 127.33, a 3-month high, fallen through its uptrend line and is gliding lower towards the red line here, the 200-day simply moving average at 124.84. That together with the early November high at 124.28 may offer support going forward. And then we'll have to see whether the recent dollar strength can actually continue, or whether it was just a short-term phenomenon into the year end. So here, yes, we've broken through the uptrend, but we still have a series of higher highs and higher lows for the time being. So the uptrend's still very much intact. Nothing really has changed yet, but we'll have to watch this one quite closely in the following weeks. Dollar yen is also very interesting because, as I just said, these comments by the Bank of Japan Governor Kazuo Ueda have led to a very sharp appreciation of the Japanese yen, in this case dollar yen, falling, as you can see here, to levels last traded back in September of this year, and we are in the process of testing the 144 yen and 45 sen low from back then on this daily financial bed. Now, short term we might find support there, but if it were to give way, then we could actually slide further towards the red line here, the 200-day simply moving average at 142 yen and 25 sen. The US dollar, which has, as I just mentioned, regained some of its recently lost ground, has led to commodities just trading in less volatility, and in some cases even coming off. And if we start by having a look at Brent crude oil futures, we can see here that we've seen basically 5 consecutive days of falls, with the Brent crude oil price dropping to levels last traded in July of this year to basically several month lows. And as you can see here on the front month futures contract, we dipped down to 74.16 and are trying to regain a little bit of lost ground today. But this drop we've seen, this sharp drop over the last week or so, was on the back of this postponed OPEC Plus meeting last week to last Thursday from the previous weekend, and where we sort of had the impression that there was quite a bit of squabbling going on between different OPEC members with regards to future output cuts, and that plus ample supply has led to the oil price falling, as you can see here. Now, the next target, once we drop through 74.16, is the June low, the late June low at 71.85. So for me, that's the next downside target with regards to the chart here. And we have resistance also coming in at the mid-November low at 76.67, and also further resistance at the early November low at 79.18. But the trend is your friend, and that's pointing down for the oil price. And we also would like to have a look at Chicago wheat, because basically funds continue to cover large shortages as the year draws to a close. And you can see here the wheat price, US wheat futures, have basically risen for the last 7 consecutive days and are on track for their 8th straight day of gains. And currently we're testing here the red line, the 200-day simple moving average at 641.88 on the front month futures contract. And here we also see China's wheat export cancellation, which basically has led to further upside pressure on the wheat price out from the US. Now, technically, quite often markets do consolidate a bit around the 200-day simple moving average. We saw that yesterday. But if this trend were to continue, it does look quite strong, to be honest. And if we were to rise above the 650 area or so on this daily financial bed, we could then, at the next upside target here, test the 8th of October high around 679. So that is a possible upside target for the US wheat price. And basically support comes in between the October and also the November highs between 620 and 617. And last but not least, I'd like to also mention the price of sugar. And we can see here that the sugar price dropped very sharply over the last 2 weeks or so as supply concerns ease. And we hit a 6-month low, or near 6-month low here, going back to July of this year at 22.61. And then we had some short covering earlier this morning. But the trend's your friend, very much pointing down, especially with the recent acceleration to the downside once we've fallen through the 200-day simply moving average here at 24.74. And that to me means that the odds are pretty high that we might actually slip all the way down to the June low here at 21.89. So that's the next downside target. And we've got resistance coming in at 23.30. And also we have further resistance at the late July low at 23.93. But basically, provided we stay below the red line, then 200-day simply moving average to 24.74, for me, further downside looks to be likely with regards to the sugar price, which after all is coming off its 12-year highs. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My handle, or Twitter, I shouldn't say that anymore, on X, my handle is at AxelR_IG.